I'm going to speak on the key actions to drive inclusive growth and sustainable development in Africa. So the presentation outline will be as follows. We will look at the introduction and Africa's commitment to inclusive growth and sustainable development. Then look at the growth performance of African economies since independence and earlier. Then identify the challenges and opportunities to driving this inclusive growth and sustainable development we've been talking about. And then also propose the actions that we're expecting to take within the study to be able to come up with the recommendations and draw some conclusions and identify a way forward. On this slide, you can see, as already highlighted by the minister from Zambia, Agenda 2063 of the African Union envisions a prosperous Africa built on the premise of inclusivity and sustainable development. And also, when you look at the United Nations Sustainable Development Goals, it also calls for the same thing, sustained inclusive growth. And the African Development Bank Group's High Fives agenda that was introduced by the President Akinwumi Adesina also provides a framework for laser focus on infrastructure investments to drive that inclusivity and sustainability of growth on the continent. And we have seen from the literature, as I already mentioned, that a minimum economic growth rate of 7% is required for countries to be able to facilitate transition from low-income countries to medium or high-income countries. So we should consider growth not only in the numbers, like the GDP growth, but also the inclusivity of growth in terms of addressing inequality, poverty, structural transformation, and other key characteristics required to be able to grow economies in a sustainable way. If we look at Africa, already from the macroeconomic outlook report, if you take a short term between 2019 and 2022, you would project to 2024, as we've done in that macroeconomic outlook report, you will have that positive story we told in the earlier session. Africa is resilient, Africa is growing at a positive rate, and the outlook is positive. The red line here on that graph shows the continent. So compared to the other regions, you find that Africa is actually doing well, at par with Asia, almost. But if you look at the right side of this graph, you will see the growth rates of Africa, the annual average growth rate for Africa mapped since 1971. We actually went back to the 1950s and the trends were the same. So what you see here is like a spaghetti, an up and down story where Africa is rising and falling depending on the exigencies of the shocks that we see in the global financial market, in the global markets. So we find that a lot of what the minister already raised is at the roots of this. Because you map Africa's GDP growth, you find that it is trending the trends in the global commodity markets, the prices of global commodity markets. So we need to actually see how we are going to decouple Africa from that dependence on commodities. If you look at the macroeconomic performance of Africa on a longer term, not just the short and medium term that we looked at in the AEO, you find that Africa has been doing well relative to other regions, growing at 4.6% for the past 2 decades up to 2019, prior to 2019. But we saw the shock in COVID, but the rebound that we have seen because of the resilience of the continent as well. And we're seeing that Africa in 2021 grew by 4.8%, and this year 3.8%, next year going back to 4%, and so on. So you see that still upward and downward trajectories. And the point we need to take home from this slide is that 4.8% is not good enough to be able to pull people out of poverty, especially in a continent where the growth rate in population is also equally very high. So when you look at Africa and the historic performance of economies as a share of the global economy, then we start seeing a more depressing story than what we had in the macroeconomic outlook report. Here we see from 1995 to 2018, and that arrow is showing Africa almost on the x-axis of this graph. So compared to other regions, you see the regions that are doing well on top, East Asia and the Pacific, European Union, North America, and so on, you are seeing an upward growth trajectory. But if you look at Africa, it's a flat line, because that up and down, when you average it, you are actually not growing that much. Why is this happening? Intra-regional trade in Africa has been low compared to all the other regions. 47% in America, 67% in Europe, 61% in Asia, about 15% in Africa. So that's already one key area that our leaders have already identified, and that's why the ACFTA has been enacted. And we see that the share of Africa's growth of global trade has actually been going down. So we were doing better at independence than we are doing now. If you look at that figure, you can see the black lines on the x-axis. You find that it is declining. So that's worrying. If you look at the historic performance in terms of average growth rates by decades, basically trying to look at growth on chunks of decades, each decade, to see whether any African country has been able to grow for 7 to 10% consistently over that 4 decades we have been talking about. And then you find that that's not the case. Between 1970 to 79 up to 2020 to and 2010 to 2021, you see that flat line that's actually trending the average growth rate by decades on the continent. So we need to do more in order to be able to move forward. But if you look at country by country, some countries have been able to do that, growing at above 7% for maybe 1 decade, 2 decades, but then we see a crash, what I call failed takeoffs. So another key thing we want to look at in these studies, why do we have those experience of spikes and falls? Why the failed takeoffs in Africa? And you see countries like Equatorial Guinea and others that have done well for some decades, and then you have a crash. What happened? And how can we identify, place a handle on what are the drivers of the rise or fall in countries? And then we look at China, and as Professor Jeffrey Sachs has already told us, you see that China has, over several decades, grown above 7%. So it's possible. You look at other countries as well, South Korea, Singapore, and others. Vietnam is beginning to see that. We're seeing trajectories in India and so on. So it is possible to do this. So why is it that for Africa, we continue to see up and down trajectories? You know, when I read The Economist and they write about Africa rising, I used to think about, why are we rising? It means we fell. Because if you are not on the ground, you don't need to rise. I want to see Africa cruising, not rising. Stay on top and continue to move. And that is what we want to address going forward. Now, you look at human capital development. Jeffrey Sachs has already mentioned that. Again, compared to other regions, our investments in human capital development and the index of human capital development in Africa is not a good story. So we need to implement such policies like Jeff was proposing in the morning to try and drive that going forward. And then if you look at each African country to create baselines of where countries have been, you also see some countries are going up gradually, some are going up and coming down. And when you read the concept note that we have shared with you, you'll find some of the countries we are seeing as some good cases where we are seeing an upward trajectory, even if it's not up to that 7% that we're still talking about, but are going up consistently over some decades. Can we identify what they are doing and try to maintain that? That sets the context of why this study. But there are challenges to these opportunities we talk about. We did this concept when COVID-19 was almost at the peak, and I heard in almost all conferences, people trying to blame COVID for Africa's debt challenge, for Africa's, all the issues there, because that was the moment what we're talking about. But if you looked actually at a longer term, COVID is not the major driver of Africa's structural challenges that we have on the continent. There are things we need to do so that we're able to become more resilient and build on the resilience that we have. One is what I call the commodities conundrum. We don't have to talk about it so much again. Banjo Yeyinka stressed on it in the morning. Africa holds 30% of the world's mineral reserves, 80% of platinum, 77% of cobalt, 51% of manganese, 46% of diamonds, 22% of gold, 60% of world, or to 65% of world's arable land. Just name it. Almost everything you talk about, Africa is very rich. But Africa is still among the poorest compared to other regions. So what's going on, and how do we translate these potentials we have in the natural resources sector to actually wealth creation? These are things we need to think about. When you look at the prices of the impact of this reliance on commodities on Africa's revenues, is actually very telling. Besides diamond and gold, all other Africa's commodities traded in the global markets, its real prices have been going down since the 1960s, just deflated by inflation. And then you see that you are actually losing more by trading more on commodities. Why? The revenues and the benefits of trade always go to technology owners because they produce. Consumers don't define profit. If you look at cocoa, for example, Africa owning about 70% of it, but only 3 to 6% of chocolate retail market. So the trillions of dollars in the chocolate market we are not accessing. So just add value to cocoa, and you'll find Cote d'Ivoire and Ghana will become really very wealthy. Crude oil prices also remains in that volatile rates, and as I mentioned in the morning, structural problems in the country means that we don't even take advantage of price increases when there are price hikes in the crude oil market, like we have seen in the last 2 years. And still, the oil exporting countries are not doing very well because of the challenges we discussed in the macroeconomic outlook. Zooming in on Zambia and other countries and South Africa that has a lot of copper that will drive the electrical vehicles and the new industrial revolution, something was striking for me, because you find that when we did this analysis, 43.7% and 12% of global exports in 2018 was from Zambia and South Africa. This is crude copper. But if you looked at the market, the total market value was far less than the market value of copper concentrates by a quantum of like a factor of 10. So by trading copper and not copper concentrates, you are losing money. And you are also exporting labor. You are exporting employment. You are exporting several things. So this underscores the need for value addition in our natural resources sector. Factor productivity in Africa is also very low in all sectors. And here we use agriculture, crop yield. You find the red line on the x-axis. That's where Africa sits. We need to change it so that we're actually going up like the others, like we see in East Asia and the Pacific and Europe. Again, the point that the president raised in the morning, institutional capacity and government effectiveness, major challenge. When you look at Singapore, they talk about 3 things that made them be able to grow. And Commissioner Muchanga mentioned it: meritocracy, pragmatism, and honesty. So we need actually to improve on our public administration. We need to improve on our budget and public financial management, economic management, and also revenue mobilization. And this is why the African Development Bank and the World Bank and IMF are collaborating with many institutions in Africa to and have launched the Public Financial Management Academy to address that. Why focus on institutions? Institutions drives transaction costs, the creation of markets, specialization and division of labor, productivity that was called for in the morning, and also economic performance. But it also drives how people behave, the behavior of organizations, the process of creative destruction, and technological progress and wealth creation. So we need to really focus on building institutions in order to move this forward. How is Africa performing? You see here again on very close to the x-axis, 0.4% investment in R&D compared to other countries where it's 3 to 4% that they are investing in R&D in order to be able to grow forward. And again, for this reason, the African Development Bank is working with partners to develop what we call a knowledge and capacity development fund for Africa to be able to mobilize resources for soft infrastructure as we are doing for hard infrastructure on this continent. Patent applications in Africa remains very low. I don't need to overstress that. You look at the picture there, you can see that we are really very far. Trade and regional integration, we need to do more. And this area I won't stress a lot because our leaders themselves have identified it by enacting the ACFTA. But how we implement that ACFTA, as we heard from Banjo Yeyinka this morning, is crucial. So that we're not trading in those raw materials again, but actually using it as an engine for boosting productivity and manufacturing and adding technological inputs to our products that we trade so that we can also earn rents from our products. If you look at Africa over the previous several decades again, we see that structural transformation has not been happening at the rate it should. When we decompose this by regions, we find that regions like Eastern Africa is a little bit better in terms of seeing the diversification of the economies and the structural transformation there, but it's still not good enough. So we need to keep thinking, how can we actually ensure that our policies drive structural transformation, industrialization, and other things we have been talking about. But Africa is not operating in a vacuum. We also need to think about the external drivers that is limiting growth on the continent. Climate change is a huge one, and I don't need to overemphasize it again. Our AEO 2022 was on this topic. But just bear in mind that building infrastructure that are not climate resilient is actually risky because one event can wipe it away and you have to rebuild again. Global insecurity and also regional and local insecurity and the types of security issues is eating into the fiscal space of countries and the spillover effects we can see from the Russia-Ukraine war. The geopolitics of development, I won't talk so much about this because we have the expert of that here, Professor Jeffrey Sachs, and I'm sure he's going to speak a little bit on how the current global financial architecture actually discredits Africa and creates the conditions for perpetration of poverty on this continent. So what do we need to do in terms of reversing or reviewing how we engage in this global financial architecture so that Africa can actually break the shackles of poverty? And the spillover effects of other global market trends, we have seen a lot of that in the study, in the paper we presented in the morning. The infrastructure gap remains huge, estimated to about 68 to 108 billion US dollars of investments annually. And this is where I'm happy to see Dr. Marilaw Akinolubade, who is responsible for actually making this happen in Africa, and other vice presidents from the bank that has been here. This is a key drag for economic development on the continent because it increases the cost of capital, cost of doing business, and also reduces productivity of labor. So we need to think about what to do with that. But financial flows, another area I'm also sure that, that Jeffrey Sachs will talk about. If you track financial flows on the continent, the promises being made are not always being met. ODA, for example, that was promised to meet 0.7% of GDP, in many countries is nowhere near there. And then they're also being rebranded for other things. As climate change comes, ODA goes to climate change. COVID comes, it's COVID. So it's actually not addressing structural policy issues that can help Africa to break out of poverty. So we're doing maybe just emergency response actions and so on. But again, it's also been declining until after COVID when we saw some rebound. And this is just a picture on foreign direct investment that we all try to think about. Compared to other regions, Africa's share of FDI inflows is also very low. So look at that black dots on the x-axis as well. So that needs to increase massively if Africa is going to actually be able to break the vicious cycles of poverty. Debt vulnerabilities and consumer price inflation we've talked about in the morning, so I'm not going to repeat that. But the cost of capital is something that was alluded to in the morning. And here is the data. It actually costs a lot more for Africa to borrow in the same global market than other countries to borrow from the same market. So again, it's discrediting, disenfranchising Africa in playing in that same market that we are meant to believe it's fair and transparent. So the incidence of poverty remains a major challenge. We have talked about it. Over 60 million 2020, 2021, and then over 15 million 2022. That's additional going into extreme poverty. It's not a good story to tell. So because of all these issues, the African Union Commission and the African Development Bank Group has come together to design this study, which we are presenting to you, part of the consultative process of hearing from you what we need to look into as we continue to go to the field for this study to happen, to identify the key actions that we require to do at country level, at the regional level, at the Pan-African level, but also key actions that global development finance institutions need to take into account if they really want Africa to be able to achieve these sustainable development goals, but also what the other global institutions like the UN and co. should be doing. So we want to draw from these visions policy actions that are already taken by the African Union, the bank, and African countries. Why have they not worked? And in this case, I will really call on former ministers, former leaders of the bank, of countries, to actually come forward to tell us your experiences. Because sometimes it's not that we don't have the good policies. We do have the good policies. We do have the good strategies. We do have good action plans and projects. But some other things make it not really function as it does in other places. We need to understand what those things are. So we want to leverage existing policies, not to duplicate them, but find how to make them implementable as we go forward. So objectives of the study I've already talked about. Identify the enablers and barriers to growth, formulate remedies to those enablers, to those barriers, and actions to amplify the enablers, address barriers and amplify the enablers, explore synergies and complementarities between countries, within countries. Where do we have comparative advantages that we can actually trade with each other and be able to move things forward? And then propose key actions to be considered by our leaders as a blueprint, if I dare say, for growing at 7 to 10% for the next 40 years. So key questions we have been asking, I'll leave that on the screen. I'm not going through all of them. If you look at the concept note, you'll find all of them. The questions we're already asking to drive how we do the study. And this slide is also still talking about the questions. What are the emerging things from the studies, the work we have done so far? We need to enhance state capacity. And I'll pause because that's loaded. We need to enhance state capacity on the continent. Macroeconomic stability is key. We need to reduce dependence on natural resources. We have talked about it, but how are we going to do it? That's what this study will come up with as well. Human capital formation is still very relevant in many African countries. Private sector engagement, policies that will leverage private sector engagement is already coming out as key drivers that we need to think about. Regional integration and trade, digitizing economies and improving social inclusion, harnessing the demographic dividend of this continent is also another thing that's already coming up. But we need to strengthen public financial management in terms of revenue mobilization, building and deepening our capital and financial markets, prudential budgeting and public expenditure management, sustainable borrowing, but also transparency in how public resources are being used and curbing illicit financial flows. Like I said in the morning, we lose about 90 billion on illicit financial flows annually. If we only plug that And that is about 3.7% of Africa's current GDP growth. So if you add 3.7 to 3.8 we have now, we have reached 7% already. But it's not that simplistic. I'm just trying to be kidding about this one. But it's very important that we focus on trying to address that. The challenges we face are already addressed in the morning, so I'm not going to go back to it. So we won't pretend that just by identifying key actions, it happens on a step of hand. We need to be able to identify country by country what are the key endogenous and exogenous challenges they face and how do we address them. Broad-based policies required, climate-friendly solutions needed, ACFTA should be operationalized to make Africa a productive zone and manufacturing and industrial area, and then significant scaling of low-cost affordable financing is required. The magnitude of financing required is mind-boggling. So if you think about it, we need innovations, as we also been called for in the beginning. And finally, Africa can achieve that 7 to 15%. And I'm saying 15% because some countries have great potentials to overshoot the 10% that we've been talking about for the next four decades and build that Africa we want. Closing words. Huge opportunities, huge challenges, but in the middle of these challenges, Einstein says, lies opportunities for innovation. So we need to think, I would say, without the box. There is no box actually, because we create them in our minds. So let's think innovatively on how to drive this. But we cannot use the old map, the old models of economics, economic development, and so on. Maybe the ones that Jeff taught in his class, which is not being applied by IMF, could help. But we need to think outside the box, really, or without the box, to be able to explore the new world. The challenges we face are new and novel. We need novel approaches to be able to address them. But we need to keep in mind that in doing this, redistribution of resources is inevitable. And I'll pause there because that's where it really hits. Why they told Jeff that the business model doesn't fit is because of redistribution of resources. So we need to face that fact that even within the continent, there will be some kind of redistribution of resources if we are going to be able to achieve this. And this is our new normal, 7 to 10% growth from 2023 to 2063. And we can do it. Let's stand together and make it happen.